crypto is the bubble of bubbles. So anybody that thinks Bitcoin's a safe haven is going to be the most disappointed.
In today's video, Harry Dent, author of 0 Hour, talks about what's up with bonds, the next moves of the Fed, the raging inflation and the coming recession. Dent has been predicting a great reset of the biggest financial asset bubble in history. The market historian predicted a painful crash in stocks and an economic depression, and discusses the next moves before the big crash. He believes that the top is in and the Fed is tightening aggressively. Could the markets make a new high?
I see this all the Fed. Thank God they finally shot themselves in the foot here. They have been doing nothing but stimulating since 2009. Did not let that downturn reduce record debt levels globally, consumer debt, government debt, business debt, everything. They did not let us do the economy do what free markets do best. They boom, and then they take out the bad companies, the zombie companies, and the bad debts and move on. And then they've been stimulating ever since. Now, here's where they really blew it, though. And in two steps here, they overreacted to COVID. Okay, there's 2 years where the economy slowed naturally due to a natural virus. Nothing wrong with the economy or Fed management, which to me is a bad word right there, which they shouldn't be doing. And so they overstimulated. Now they've been forced to go the other way and tighten. This has been the biggest raise in short-term rates we've had in decades, in reaction to them overstimulating, and now they're kind of forced to have tightened. People don't realize it's a 12-month lag on this stuff. They've already tightened the most, and it's going to hit into mid next year. So I think the economy is going to weaken. I agree with what was said earlier. Basically, you look under the hood, it's like, wait a minute, we're going to have to go down harder than people think here. Well, that would be the natural response to an economy that's been way overstimulated for 14 years. This has never happened at this level. And especially during COVID, when really it was a natural virus that would get over itself. And now they're forced to reverse. I think that the economy is going to weaken stronger than people think in the next 6 months. And then they're going to be slow. They're going to pause first. I think the next move is a pause, and then maybe that's that. And it's going to take a while. But I think that by the end of this year, they're going to force back into stimulating, loosening rates again, which is going to now look really stupid. To me, this is what needs to happen. The Federal Reserve should not be, if you believe in free markets, you let free markets do what they do. You don't say, oh, we can never have a recession because people will lose jobs and it's bad for the economy and bad for politicians. So this is what's happened here. They stopped. I predicted this 20 years, not a year. 2008 looked just like 1930, beginning depression, which also came after the greatest stock bubble in history, greatest debt bubble back then. Same thing
Harry,
again. What they did was push this, and now they're stuck. So I think that sooner or later this year we're going to go back down again because they've had to tighten. It's going to hit more months, and they can't just turn around and loosen. I think they've defeated themselves. Thank God.
Harry, what do you think? Do you think the market was worried? Do you think the market should be worried?
Yeah, I think the number one thing I'm watching right now is the stock market. The stock market, people forget, the NASDAQ took a 38% first crash, okay? That told me the bubble was over. It takes something like that, 30 to 40%, okay? S&P 28%. Now it's bounce. It's starting to turn back over. If the stock market figures this is not going to happen, if the economy weakens enough for the stock market to go down and start to make new lows, then I think, despite Fed policy and all their over and under doing it, the consumers and businesses start to smell a recession, and then the economy slows down faster and it's hard to fix. My demographic long-term stuff said we're at the bottom of the demographic strength, that started in 2008, which is weak through 2023. So the fundamental economy is weak. We've been living off total stimulus. So if consumers and businesses lose faith in the stimulus, because the stock market starts crashing again, which again, if I'm a chartist, man, I look at charts and try to pretend I don't know what it is to get the best view. It looks like we're about to move into a strong third wave, the middle wave down of a bigger stock crash. If that starts to play out, that will scare consumers and businesses. And then the Fed is kind of useless to say, okay, well, we're gonna loosen again faster. I think it's going to be too late, and they've been too late all along. So we'll see. This is the trickiest circumstance I've ever seen. This is extremely simple for me. There's only one investment that stands out in this time and stands out so far, it doesn't have to do anything else. This is a defensive play. Second major bubble in housing, clear as bell. Second major bubble in stocks globally, clear. The only thing that does well, and look back at 2008, including gold going down almost 40% at the worst in 2008. U.S. Treasuries, the longest term possible, 10 and 30 year. TLT, ETF, 20-year average. TMF, 3 times that. I think you can see the biggest return on that fund in 6 months of any investment almost in history. It is the haven. It's not gold. Gold is better than other things, commodities and stocks, but gold I'm targeting down to about back to 1,000.
1,000.
So it'll go down, but not as much as other things. I'm saying stocks will be down 80% plus. So there is no place to hide. Look back at 2008. The one thing that went up, it went down, including gold in the final stages of that, which I think we're going to see in the next year and a half. Final stages of this downturn is the 30-year, 10 and 30-year Treasury bonds. That is the safe haven. They could literally, and I'm telling you, we're in a trading range, 99 and 110. Look at this chart, TLT. It breaks above that 110, which I think is the next move. It's got to hold 99 first. I've got a target of 186 on the safest bonds on earth. Imagine you're in TMF, 3x that. I'm just saying that is so attractive. And I'm not talking, this is not a long-term play. Well, I'll talk about AI and tech stocks and where to be once we've seen we have to get rid of this bubble first. We have to get back down to reality. And for that to happen, everything's got to go down. Commodities, oil, everything, stocks, and only the Treasury bonds do well in that scenario. So that's what I want to be for the next year and a half.
Harry, do you think that if your scenario plays out over the short term, that they'd come in with more of this fiscal that would create what we saw in 2021 with the consumer price inflation?
You know, I think, of course, they'll reverse to loosening again, and yes, they'll be talking about fiscal. I think they're just going to be too late. I think they have stretched this so far both ways that I think they're screwed. Finally, thank God, because they've just overdone it all the way, and now they put themselves in this corner. The next stop in the stock market, if we break the new lows, and it will not take long to get there by the end of this year, will be down 60%. That will now be a stock crash greater than 2007, 2008, which led to the biggest recession we've seen since the early 80s and the early 30s before that. I think that's what gets the consumers and businesses on alert, like I said before. And then what you want, okay, what's another so many trillion in fiscal or monetary stimulus when you've already done 10 trillion in the 2 years in COVID, coming 10 trillion, 50% of GDP, and we're falling into a recession again? That's when I think the consumers and businesses get it and say, wait a minute, there's something fundamentally wrong here. And guess what? There is. We've been living off stimulus for 14 years. That's insanity. That's never happened in history and probably will never happen after this. They call it a great experiment. It was. I think it's going to fail. So I think it's when the consumers and businesses say, uh-oh, they can't turn this around. Markets, and I think the stock market's going to be the signal because it's the leading indicator. And we start breaking the new lows, and then we keep going. And next thing, you know what the target is? Look at the charts. The COVID lows, that's down 60%. In the NASDAQ and the S&P 500. That says to me, to everybody, we're in a serious downturn. Nobody's going to be out buying a house.
Where do you put Bitcoin in all of this? Do you put it as a risk asset, or do you put it as a gold store of value?
Exactly. That's the best point made right here. Bitcoin they're saying it's a safe haven like gold. Even gold wasn't a safe haven in 2008. Bitcoin is the risk asset. It's like the dot-coms came in the late 90s, accentuated that bubble. Amazon went down 95%, folks. The leading new retailer, okay, in the world, and has been one of the greatest stocks since. That's what happens here. Bitcoin has led this crash and will lead it for Bitcoin is minimum 10 to 11. I think, and I have to disagree with my crypto friends down here in Puerto Rico, I think it's going to 3,000.
Wow.
And that's going to, boy. And people are going to say, oh, it was a hoax. That's when I'm going to be buying Bitcoin, because Bitcoin is the next big thing. Digitization of all financial assets. That's a huge thing, but it's in its baby stage.